Hello, y'all. Welcome here from all the way from Portland, Oregon.
I am not going to attempt an American accent.
That was pretty lame by me, but any case. Rach, it's been a good 3 days, hasn't it?
Yeah, it really has. Last day today.
FinCon. Now, for those listeners that haven't heard of FinCon, which is probably a majority because I hadn't heard of it.
I had not heard of FinCon either.
It's a financial conference that's held every year in the States. It's been running 15 years.
Yeah.
And we've had the pleasure of coming over for it.
Yeah, it was actually quite integral in the start of the Money community.
That's right. Yeah, that's, I think, where Glenn got his inspo.
I still
early
remember.
days.
I remember when he was heading off to his first FinCon and came back and started talking about this wild concept called podcast.
Yeah. And he said, let's do a podcast. And I'm like, oh. I didn't say it to him at the time. I don't know if I've ever actually told him, but I didn't actually know what a podcast was back then.
Nor did I.
Yeah. So anyway, full disclosure on that. But who's here? A lot of money nerds, really, aren't they?
Yeah, and a lot of people who are here, a lot of people who have an audience and talk to people about finance and educate in different ways, predominantly in the US.
Yeah. Yeah, we're definitely the outlier here. There's not too many Australian accents.
There aren't.
But which is kind of cool.
Yeah, it's also pretty cool to look at the comparisons between the two and what people are seeing here and what their concerns are, especially across different demographics.
I don't know about you, Rach, but I can often feel a little bit intimidated by the States.
Really?
Right? In terms of them leading the way in different areas of life, I suppose. Maybe it's the TV shows or the movies or whatever.
Yeah.
Do you feel that?
Oh, look, in some ways I feel like, yes, I think we lead America in a lot of different ways, but in some ways I think that we lead in different ways as well.
This is why I raised that, because I'm sitting here thinking, well, some of these concepts that they're talking about, like building YouTube channels and running podcasts and all these things, like we're not behind in any way, shape or form, and often leading where they're currently at right now.
Yeah, and I think something that is very similar is the concerns of different people. Like obviously they've got the same cost of living pressures that we have. Their student debt is a lot more prevalent here. That's a much bigger issue. I've heard a lot of people talk about that student debt.
Yeah, no, it is. It's pretty crazy, the student debt thing, because I think university is, I wouldn't say more of a done thing, but it's a lot more, how do I word that, prestigious to go to university over here.
Yes.
So,
and where you go is so
where
important.
You go. Yeah. And the whole scholarship thing. But in any case. Recently just had a guest from the US on the podcast, so go back and check that episode out if you haven't listened to it already. And I suppose he talked about the real estate market from his point of view, talked about flipping houses, talked about high cash flow strategies for American investors. And you and I have both had some conversations with some people over here that are of probably the same opinion, aren't they?
Yeah, well, I've definitely had some breakout conversations with people in property. And, I mean, we were so shocked when we did speak to that guest, but there's a definite that 30-year fixed rate still blows my mind. But I guess what blows my mind more is how many people here are actually tied to their property because of that. So, people would have a 2% mortgage. They won't sell their home. They can't move on from it because that mortgage is linked to that, or that 2% is linked. So if they sold today and then they moved, they'd go from 2% to 8%.
Yeah,
and we just have nothing like that in Australia.
No, well, we don't fix our loans for probably more than 5 years, really. Like there's the occasional.
Even that feels wild to me.
It does, yeah. And we never usually win. When we do fix it is generally what history tells us.
Yes.
But in the States here, everyone's winning because they've fixed it at 2% or 2.5% for 30 years.
Yeah.
So it's a very different mindset in the sense that they don't actually want to pay down their home loan. Like they're not motivated by it.
Well, they're not at all. So we had a conversation yesterday with somebody that was saying the younger generations especially don't believe they're ever going to pay off their mortgage.
No.
They are just paying the minimum repayments. That's all they plan to do, and they're investing elsewhere.
Yeah, and they're also creating lifestyles for themselves as opposed to the boring old philosophy of paying down a mortgage. Like they're treating it almost as rent, aren't they? They're saying, well, okay, I'm living in this house. Yes, I own it, but I'm just attributing an amount that I'm going to call it rent to my mortgage, and that's a manageable amount, and get on with my life.
That's right. And something that I would see as a similarity is that the younger generations in the US are feeling as, I guess, disenchanted with property ownership as we're seeing in Australia, where some of and I'm going to use Gen Z as an example, they're just not feeling like home ownership's on the cards for them.
No.
I don't feel like, although I do feel like there might be one difference between the US and Australia, which is in Australia we still have that feeling that it's part of our rite of passage to own a property, where in America I think because maybe they're an older country, they're just, especially in the cities, a lot of people there are feeling like that home ownership's just not something they've ever considered.
No, well, that's right. And I think it's definitely not the great United States dream like we've got the great Aussie dream, which in some cases is a great Aussie nightmare because it's such a large mortgage to wrap your head around.
That's right. And I find a lot of people here, a lot of people that I've spoken to are educating people in finance, but none of that has anything to do with property. A lot of it is alternative ways to build wealth.
Yeah.
Now, nothing here has changed my mind. I'm still pro-property, and I actually feel like we need to lean in more to Gen Z after listening to some of these sessions about encouraging the Gen Z property ownership dream.
Yeah.
Because I would hate for Australian Gen Zs to think that's just not part of something that's possible for them.
Yeah, and I would say a large proportion are thinking that at the moment. There's maybe not possible, but there's definitely a fear around it, isn't it? It's like, well, am I ever going to be able to buy a home where I want to live?
Yeah.
And maybe the facts are, no, you're not. But can you buy a home to live in somewhere? Absolutely.
And that's the thing. So when we talk about America being ahead of Australia in some places, and I love to come to places where things are a little bit ahead of where we may be heading and learn from that. But something that I have noticed is America in the States, people have long realised they need to move to be able to afford a property. So it's just something that's given you. If you're in New York or if you're in, what was the other one that we're talking about? It might have been LA.
New Orleans,
people are just they're taking job opportunities elsewhere, knowing that that's the only way they're ever going to be able to find a property. Yeah. And I feel like that could be something that's on the cards for us.
Yeah, and case in point, the Uber driver this morning that took us to an Aussie coffee shop. Which was
I
cool.
didn't make that.
Yeah, you had to rest. He was saying he moved from New York City 20 years ago, with the foresight of knowing that he didn't want his kids to grow up in New York.
And what were his reasons for that?
Well, he felt that it was too busy, it was too expensive, like he just wanted a better life for his kids.
Yeah.
And they were very young at the time, and he hasn't looked back. He went to Seattle and now he's in Portland and absolutely loving it because he's got the best of both worlds. He's got his kids in an environment where there's more space and the affordability is a lot better than living in New York. So there's a whole range of side benefits from that for families. But if we give the Australian equivalent of that, we say, well, Sydney might be the New York.
I think Sydney is New York.
Yes. And there's a lot of suburbs in Sydney where you say, look, put a line through it. We're never going to be able to live there. Let's get our head around that now. Think 10 years, 20 years in advance and say, well, actually, I'm going to be a bit of a leader or a disruptor to my own little environment here. And I'm going to take off to Newcastle or Wollongong, or I might even go inland, which is even cheaper again, and know that I've got still everything at my fingertips in terms of healthcare and education and universities, flights out of there. Like I don't, just because I'm moving out of the city doesn't mean I'm never going to the city again or have access to it.
Yeah, that's right. I heard somebody say in one of the sessions, they called the Gen Z the Zoomers, and they're not tied to a place as much here.
Yeah.
And I'm not sure if Australians feel like that yet, where they're not tied to a place. I know that I would feel very tied to where I am.
Yeah, I think
geographically.
it's much more common for Australians to be like, I could never think of moving out there. And that might only be 4 suburbs away. Like,
Yeah.
But I think what we're talking about today is the Gen Zs need to be thinking outside of the box.
And maybe even even the parents of Gen Zs, if you're going to be living anywhere near your children, are people thinking about moving out of Sydney to be able to buy a property where their children can also raise their children?
Yeah, absolutely.
Like your Uber driver from New York.
Like
if Sydney's New York, are people going to be moving out as generations?
Yeah, correct. And like when we use Sydney as an example, but majority of capital cities in Australia now have got $1 million median price.
Yes.
Right. So put Adelaide in there, put Perth in there, Brisbane's already there, Melbourne's there, right? There's only a few others missing, and Canberra's there as well. So when you look at that, you say, well, okay, if that's the median, generally we probably need to pay more than the median.
Yes.
Because of the better suburbs are more than the median, of course. So that means I'm probably going to have $1 million mortgage as a minimum.
Yeah, and that's a big mortgage for a first home buyer.
5% grand a week, isn't it, in just interest to the bank?
Yeah. So the median house price in Australia, that's about 800,000. Or is it $1 million now?
Say again?
Is it median house price in Australia $1 million?
Oh, I don't know what the
Sydney?
Australian median house price.
I saw a stat that said I think Australia as a country was about 800 and the US was about 400,000. I think I just looked at, but we actually had our median income is much higher to be able to cover that than America. So even though Americans are feeling disenchanted, we are actually having a tougher cost of living crisis than in the USA if you're looking at our wages comparatively to our average house size.
Yeah, absolutely. And their unemployment's a lot higher here, and interest rates are higher at the minute, aren't they, as well?
Yeah, they were talking about locking it at 8%.
Yeah, which is crazy, isn't it?
For 30 years.
Yeah, yeah. The cost of living here is out of control. You just
had a $12 water.
I had a $12 water. I was like, I'm going to fill this thing up for the next 5 years just to get my money back. Like the ice creams last night. We had 3 ice creams. It was like $50.
Yeah.
Australian. Like it was good ice cream. But in any case, we'll take a break. And when we come back, we're just going to keep talking about FinCon and what US has to offer us.
This is Property is brought to you by Sphere Home Loans. Sphere Home Loans is a mortgage broker that helps our listeners all around Australia. So, if you want to get into your first home sooner, looking at upgrading, an additional property, or want your current mortgage reviewed, just search Sphere Home Loans or click the link in the show notes, and their dedicated brokers will be able to help you wherever you are. If you are, however, after personal financial advice, don't get it from a podcast. If you would like help based on your own personal situation, head over to moneypodcast.com.au, click Get Help, and we'd be happy to introduce you to one of our trusted professionals. That's moneypodcast.com.au and click Get Help.
Yeah, little bit of a comparison. And I always go back to what my parents used to say when America sneezes, Australia catches a cold.
Oh, I haven't heard that.
I've not heard that. Wow, there you go. So might have been just the country folk saying that. But in any case, the message was that if something happened in America, it would then follow on and happen in Australia, whether that be interest rates, whether it be, financial crises, like Trump administration, like something happens there and our share market flows on as a result of that, whatever it might be. All right. So when it comes to real estate, they're two very different markets. Like if I call Australia a market and US a market, even though they're thousands of little markets, they're two totally different markets in the sense that lending is out of control, different to us. Right?
We had some conversations about the lending here. It seems just so wild.
Yeah, and which affects property.
It does.
Right, doesn't it? Because you mentioned before about, well, people don't want to or are tied to their home because of the fixed interest rate.
Yes.
Right? So what does that do to supply? Well, there's not many people putting properties on the market because they don't want to move.
Well, they're predicting there'll be a lot less transactions in the US because so many people are locked into these 30-year mortgages at 2 and 3%. Nobody wants to move to the rates that they are now.
Yeah.
And I just think it makes Australia so much stronger, their finance economy so much stronger, that we can just have that flexibility to move.
Yeah, we're very unloyal, if that's a word, to our banks. But our banking system is way stronger, I believe, than the US banking system.
And a bit more conservative.
Way more conservative, yeah. And they were still talking about being able to hand your keys back in here, which our guy on the podcast...
I've definitely heard that a lot more times. So it's you're personally guaranteeing it, but it doesn't affect you can leave the house and you can just go. They don't come for you personally if they take the property. It's attached to the house, the debt.
Yeah. What about this lady that you met, who we then spoke to in a bit more detail, that has, actually I can see her from here, 60 properties.
Yes.
And does not use the banks at all.
That's right. Lots of private funding, but also this whole no money down concept. So it's very common here to buy a property with no money down. And lending on the future value. And some people might think, oh, that's fantastic. But for me, I can see a lot of risk that would be attached to that, which is probably why the American market has that it's much more elastic. It goes up and down a lot more than the Australian, much more volatility.
Yeah. But like she was even saying how like she's not using the banks, but she's also going straight to the vendor to negotiate how we're going to transact. So there's a separate legal, like lawyers must be cleaning up over here.
Well, yeah, she's got a rent to buy option on many places. So somebody, these 2% mortgages, they're locked in for a long time, but somebody wants to move for work or something else. But they don't have enough equity in their property. And it is, people are buying with 2 and 3% deposit here. So there is a lot less equity. They can't sell.
No.
So somebody like that person we're talking to is coming in and just taking over their mortgage and paying the repayments. And if they default, that original person can take the house back.
Yeah.
So rent to buy, essentially.
It's a rent to buy, which in Australia was a thing 20 years ago.
I remember it vaguely. I remember trying to refinance people out of rent to buy schemes a long time ago.
So for those that haven't heard of it before, so basically what happens is I'm renting a property and it's owned by Rachel, and I say, look, I'd love to get into home ownership, but I haven't got a deposit.
Yep.
So I'm actually going to pay Rachel more than the rent. I might pay $100 more than the rent that I'm paying Rachel already, and that's basically down payments or my deposits building up for me to take over the property. However, the price is agreed upon when we commence that rent-to-buy agreement.
Yeah, and they pretty much stopped doing those in the early 2000s that I'm aware of because they weren't seen as a fair deal for the person buying.
Unfair to the buyer?
Unfair to the person who was renting to buy in Australia. We go back to the early 2000s. It was seen as targeting people who couldn't get into property, making them pay outrageous rates, well above rent, and their terms, a lot of the time they couldn't refinance to get the owner off later on, and then the owner would take the house back. It was just seen as unfair practice, and Australians, we pretty much got rid of that.
Yeah. So, see, part of that, or part of me wants it to come back.
Yeah, okay.
Right.
In a fair way, though?
In a fair way, but like the excitement of it for me as a renter, right, if I'm a first-time homeowner again, I'm sitting there saying, all right, I like the place I live. I don't want to move from here. So, one, I don't have to move, pay a removalist. I like the location and the house is okay. And I can afford extra payments, but not exorbitant. I haven't got 50 grand laying around just to put down as a 5% deposit, for example. But I can negotiate the price that I'm paying for this property, even though I don't own it effectively straight away. So let's use the example that I said before. John's a renter, the tenant, and you're the owner, Rachel. So Rach, your home today's worth $500,000.
Yep.
And I'm saying, okay, I think that this area's for me, and I think this market's generally pretty good, and it's going to be going well into the future. How about I give you $550? So I'm paying overs, because this is essentially how it used to operate.
Yeah.
I'm paying overs for it now with the view that once I actually take over it, it might be worth $700.
Yeah.
Whereas in America, your property that you bought rent to buy for $280 in 10 years' time might be worth $330.
Yeah, their capital growth isn't the same.
Terrible. So which is why they love the cash flow strategy over here, because the rents are so high because there's not enough houses, but the growth is so low, which means that a $330 value property is renting for $500 a week.
Yes.
Right, which is great. And you have 10 of those and live happily ever after. But it's a risky market because you've got the highs and lows of each area.
It is. And another area that they've got here that we don't have as much is their property taxes. So that's a big thing. So a lot of people, and I was talking to somebody who their client base was all looking to retire mortgage free, and then their their benefits, retirement benefits were enough to support them.
Yes.
But now they're not.
No.
Because the property taxes are so high. And I hope we don't follow in that way.
I hope so too. You mentioned taxes, and I got my checkout account from the good old Hyatt Regency this morning.
Yeah.
There would have been 8 different taxes on there.
Yeah.
Like they've got taxes coming from everywhere. And the other thing that we learnt yesterday, and sorry for those people who already know about USA real estate, by the way, because we're just repeating stuff that you already knew, but that's podcasting. What I couldn't get my head around is I can live in Portland and be charged a state tax.
No, yeah.
And I could also, but I could move to Utah and the tax might be $1,000 different. Like there's this state tax that's just wild. And part of the homelessness is attributed in Portland to the fact that their taxes are so low. High? Yeah.
Yeah.
Right? So that's weird.
Yeah, because state tax, then they've got their national tax.
National tax,
and the guy
state
from
tax.
New York was very proud that he pays for everyone else's taxes because
That's
the
right.
New York
It's the
tax
highest
was so high.
Yeah. They've got county tax, they've got state tax, they've got national tax and some other street tax or something. Like it's pretty crazy. So that also determines where people might want to live.
It would, because you can actually move states and change your tax bracket. Yeah.
Yeah. So there it is.
Well, the things that we hope don't follow to Australia, all of those crazy taxes, the land taxes, and the wild lending guidelines.
Yeah, we just don't want the government to listen too much to what's going on over here because, we talk about the Wild West, but this is the wild states when we compare it to Australian real estate, I think. All right, good chat. Hopefully someone got some benefit out of that. It's... we're going to jump on a plane pretty soon.
We
and
are.
Get the hell out of here.
Hopefully a lot easier going out than in.
Yeah, there was a bit of a drama coming in. Some bloke didn't complete his visa form the correct way. Anyway, I'm sure you'll hear about that on the airwaves. All right.
Awesome. Well,
I'm
thank you
John.
for joining
This
me
is Rachel.
in Portland, John.
And this is Property.
Any information given in this podcast is for entertainment purposes only, and you should seek your own property advice before acting on anything you may hear in this podcast. If you want to start or advance your property education journey, John Pidgeon's book, Sort Your Property Out and Build Your Future, is available where all good books are sold, or via the link in the podcast show notes. Opinions or comments from any guests on the podcast are theirs and not those of the hosts, the publisher, or their respective license holders.